Imagine unlocking strategies so effective they could make 2025 your most profitable year yet. Picture yourself confidently investing in dividend stocks, knowing your money is working for you even while you sleep. What if I told you that the secrets to successful dividend investing are simpler than you think, and they are within your reach? Hi, I am Steven. Over the past decade, I have worked in Europe's major cities as an investment banker and served as a finance executive for Fortune 500 companies. I have navigated the complexities of dividend investing, analyzing what works and what does not. Today, I am thrilled to share the insights I have gained along the way. Insights that could transform your approach to investing and help you build wealth that lasts. In this video, we will uncover the secrets to successful dividend investing in 2025, including how to pick the right stocks, avoid common pitfalls, and leverage the incredible power of compounding. Stick with me, because these strategies have the potential to change your financial future forever. Let's start by addressing some of the biggest mistakes investors make with dividends. Many people focus solely on high-yielding stocks, thinking they will maximize their income. But here is the catch. A high yield often comes with higher risk. If the company's financial health is shaky, those dividends could vanish overnight, leaving you with losses instead of gains. Another mistake is failing to diversify. Putting all your eggs in one basket, whether it is a single sector, industry, or geographic region, can leave you vulnerable to market fluctuations. Diversification is not just a buzzword. It is a critical risk management tool that every investor should master. And then there is neglect. Too many investors set and forget their portfolios. They fail to monitor their stocks, keep up with earnings reports, or adapt to market changes. Over time, this lack of attention can lead to stagnant returns or even setbacks. But do not worry, we are going to fix that today. When evaluating dividend-paying stocks, the first step is to understand the company's financial health. Look beyond the surface by analyzing key metrics like the debt-to-equity ratio, interest coverage ratio, and return on equity. These numbers reveal whether a company has the financial stability to sustain its dividend payments over the long term. Next, examine the payout ratio. A payout ratio that is too high, say above 70 or 80%, might mean the company is overextending itself, leaving little room for growth or unexpected costs. On the flip side, a lower payout ratio can indicate a healthy balance between rewarding shareholders and reinvesting in the business. Another critical factor is recognizing industry trends. Are you investing in a sector poised for growth, or are you backing a declining industry? Staying ahead of the curve here can mean the difference between a portfolio that thrives and one that stagnates. Coming up, I will reveal how reinvesting dividends can create exponential growth in your wealth, and how you can start leveraging this powerful strategy today. Now, let's talk about what sets the best dividend stocks apart from the rest. A strong track record of consistent dividend payments is a clear indicator of financial health. Companies that have been paying and growing dividends for decades are often safer bets for long-term income. Look for businesses with a competitive advantage. This could be a unique product, a dominant market position, or superior operational efficiency. Companies with strong moats, as Warren Buffett likes to call them, are more likely to maintain profitability and continue rewarding shareholders. Staying informed is just as important. Regularly review the company's announcements, earnings reports, and industry news. This allows you to spot opportunities and avoid potential pitfalls before they impact your investments. Now let's discuss the game-changing power of reinvesting dividends. This is where compounding works its magic. When you reinvest your dividends, you are not just earning income, you are creating a snowball effect. Each dividend payment buys more shares, which generate even more dividends, and so on. Over time, this exponential growth can turn modest investments into substantial wealth. Setting up a dividend reinvestment plan or using a brokerage with automatic reinvestment options is one of the smartest moves you can make. It is simple, effective, and requires no additional effort once it is in place. Let's take a real-world example. Imagine you invest $10,000 in a dividend-paying stock with a 4% yield. If you reinvest those dividends and the stock grows by an average of 6% annually, your investment could more than double in just 12 years. That is the power of compounding. To recap, successful dividend investing is about more than just picking stocks with high yields. It is about understanding financial health, diversifying your portfolio, staying informed, and harnessing the incredible potential of reinvesting dividends. If you are serious about maximizing your income and building long-term wealth, the strategies we discussed today are your roadmap to success. Thank you for watching. If you found this video helpful, do not forget to like and subscribe to the Money Mentor Hub for more insights on personal finance and investing. I would love to hear from you. What are your strategies for successful dividend investing? Share your thoughts in the comments below. And before you go, check out the video on your screen right now. It dives into the biggest finance trends for 2025 and how they could impact your investments. You will not want to miss it. See you in the next one.